Hello there. Hi guys, what's up? Trade review time for the day. I had one trade today, one's very small winner, and we'll go over that trade. Very interesting action on ZM. There was some very clear setups. However, the options barely moved for some reason. I guess it was because of the lack of demand or just something. Maybe the market makers were underwater. I don't know what was happening. So basically, they barely moved, even though ZM moved quite a lot in the stock. So probably this trade, if I would have taken it with a stock trade on margin, it would have probably worked a lot better. But the options barely moved. So we'll go over that real quick here. First of all, I want to say that Interactive Brokers has been having a problem with their Apple and SPY options data, the two most liquidly traded instruments in the market. And the option data just sucks. In the like, look, you see this chart for Apple. 277.50 calls. I don't know what's going on here, but they're messing up. So I click on an Apple put option now. Look, see how long it takes to show up? Okay, that one was a little better. But see, I zoom out and it's all glitched up. You can't see the data that happened today. You can't see any data. You can see some data from yesterday. You can see there's a bit of data there, but most of the data is missing. So that's been a problem with Interactive Brokers. I don't know what is going on with their data for the options, but it's been very hard to see that past data. I guess it comes through there. That's cool. So if you go back a few days, you can see it, but the intraday moves, you're unable to really see where that volume's coming in. So you have to go back and look at it afterwards or the next day after, okay? So just keep in mind that. All right, guys, let's get to the trade review here. So ZM, interesting moves today. So right off the open here, it was the bulls came through right off the open. And let me move myself over for now here. You can see bulls came up, and then I was looking at this sort of price action here where we're sort of grinding higher, and it gave some info. Actually, I was watching it a little bit further here. This is when it started to look pretty toppy, actually. So you're looking at that, and generally I was saying, okay, ZM looks extremely toppy right now. Look at this volume. This volume is absolutely horrendous. And yeah, so I got into some puts at 10:12 a.m. I got into the 100 puts. They have about a 10 delta at that point. And I got my fills around 67. These options were being quoted with spreads of 10 to 15, even 20 cents wide at some point. And generally, they were not moving much. Market makers were not moving their spreads around so much. They're being very conservative with moving around those spreads. So I'm not sure what was happening with that. Maybe there was a lack of demand for those options. But I'll show you how they barely moved while ZM moved down after that. So I got into these puts at 10:12, which would have been right here. You can see. So this was basically the signal, right? High, chopping here, and then tried to break to a higher high and failed. Got sold into with a huge amount of volume, 100,000 shares there. Then sold, tried again, failed, tried again here, and then we rolled over after that. So basically I got in at 10:12. Generally, I was risking to above 114. It was going to be where I was going to be completely out of that trade, obviously. But as you can see, it worked and it rolled over aggressively after that. So I got filled at 67 here. You can see there, filled with 67 for my contracts. And I didn't pay any commission for that fill, by the way. I got a credit of $11, which is interesting. Sorry, 11 cents. So after we got the bear break, I want you to look at what the options did. So I got filled around here around 65, 67, and then they topped out at 80, and that was it. There was no gamma accentuation. There was nothing, okay? So that kind of freaked me out, and I was having a lot of trouble getting filled to close this position. That's another thing, and I guess it's because of lack of liquidity and lack of trading activity in general. You can see this. There's not a lot of trading activity. There's a lot of time where the options are being quoted sideways or the spread is not moving much. So those market makers are not being very generous today on those options. And that's a sign. That's a sign that we're in choppy conditions and the market makers maybe are underwater. Like, you don't know. Maybe the market maker is a very short delta, or maybe he's extremely long delta and he's trying to hedge himself. You don't really know what's happening here. All you can look at is what they're quoting them for, how aggressive the buyers are, and what happens to the premiums when the price moves. Okay, like yesterday, the example was with Apple, where we had a 2-point move down, but the premium of the option call options didn't move at all. So that stuff happens, and it's very notable to watch. So the options market gives a lot of info, a lot of insight, I'd say, as to what's happening or what could happen per se. All right, so as you can see there, my fills were 75. I couldn't get more than 75 for these contracts. I had limit orders at 80, 85. The ask was at 85 at one point. There was like 100 contracts on the ask, and they just would not get filled at 85. And you can see this immense drop right here. So theoretically, from 113 to 111, that's a 2-point drop. And with a 10 delta and with a 1 gamma, that means that these contracts should have theoretically moved approximately $20 a contract, which means that from 67, they should have been around 85, 87. They should have been trading. The mid should have been there, but it wasn't. Not enough demand for the contracts. So I was lucky to get out of those things. Actually, I got out at the bid at one of these. This 75 here, I filled that at the bid. This 75, I was lucky to get a fill at the mid. So you can see, look at my commissions paid there. I paid no commission to open the position. I got a rebate of 11 cents. Then I paid $1.10 to close it because I closed it at the bid. And then I paid 35 cents for that last contract because it was filled in the middle of the spread, okay? So that's the trade on ZM. So I'll just do a quick demonstration now on how I like to find options to trade, okay? So you want to pull up your options chain, take a look at it, and take a look at the volume traded on all the contracts. You can see here, this one stands out right away as 2,500 contracts traded. So you look at that option, you can see there is clearly some trading activity on this option, right? So that's generally how you want to look at it. Another thing you need to look at is on the right side here, you want to look at how many contracts on the bid, how many contracts on the ask in general, and this over here, which is just showing the transactions taking place. So if you're looking at an option and there's no transactions on the option, that's a red flag. Don't trade that option, okay? So you want to see options that have transactions being taken place. If you look at the SPY and Apple options, every minute there's tons of transactions, obviously. But on ZM, not so much. So you have to be very picky, and sometimes you might have to choose an option that is higher risk, so you might need to lower your position size. So that's it. So look at these 100 calls, there's 500 contracts trading, but right now there's nothing happening. It's 12 p.m. There's a bit of action, but really probably this is just the market makers trading amongst themselves at this point. Okay, guys? So keep an eye on open interest, keep an eye on volume, keep an eye on the spread of the option. The tighter the spread, the better off you are. Sometimes the spreads move, and obviously you need to look at your Greeks. Before we finish, I just want to show you the ZM chart here. Now look at this. I was watching it afterwards. After we got that bear break, we chopped around in this general range for a while and then moved up higher. And then after this point, I was watching the highs. Watch these highs and how it reacts at these highs. So the high of day was 113.80. It came up, consolidated a little bit. Now we broke above it. Look at when we broke above it. Right there. New high of day. Failed right away. Okay? Moved down. But it did not break its last higher low. So it's saying that the bulls are still not giving up here. We came up again. Consolidated right below 113.80. Okay? Now at this point, you're watching the order flow. You're watching the tape to see what kind of stuff is happening. What does the flow look like? Okay? And obviously you're looking at the SPY and all that other stuff too, because it is a very good indication of where the market is likely to go next. Okay? And you can see there we moved up again, failed, and then got a huge bear break, and that was the end of the story. Okay, right at that resistance. Okay, so that's why we watch price moves when they come close to these key price areas. We watch the order flow when the price comes close to these key price areas. Okay, guys, do not jump the gun. I was waiting for clarity in this trade. Clarity. I was gonna get long the calls here if we were gonna see a move above 114. If we're going to start to see some higher closes with some strong bullish order flow, that's generally a good indication to get long, because we're going to see a little bit of a breakout here, and it's likely that shorts, any sellers that sold here, sold there, or sold yesterday or the previous day, are going to get squeezed and have some pressure put on them. So that's why you want to be long in that trade. Okay, guys? All right, so I think that's enough. I gave away a bit too much in this video, so have a great evening, and all the best to you. Take care. Bye.